Good evening and welcome back to my channel, Traveling Trading Zone. I know it's been a while since I've been on. Unfortunately, there was a death in my family, so I've been taking some time off to spend time with my family, my loved ones, and take care, get some things in order. So now that I'm back, so today we will be going over, continuing our review of Trading in the Zone by Mark Douglas. And so today we will go over chapter 3. We already have reviewed chapter 1 and 2, which is on my page. If you haven't watched those, go ahead and catch the replay. If you haven't had the chance to order this book yet, I would suggest you go ahead and order it from Amazon and go ahead and catch up on chapters 1, 2, and 3, catch the replays, and then next week we will continue our normal schedule and I will be reviewing chapter 4 of Trading in the Zone. All right, so let's go ahead and get started. So, chapter 3 is titled Taking Responsibility, and that's the title of this chapter. But let's just go back to the purpose of the book. So the purpose of the book, if this is your first time hearing about this book or watching these videos, I emphasize this on every video. The purpose of this book is to help traders develop a mindset for consistent success. The book teaches traders to approach the market with the right psychological framework. It also focuses on overcoming fear, greed, and other emotional pitfalls. It also emphasizes psychology and how technical analysis and strategies can only take us traders so far, and that psychological discipline is the determining factor in consistent trading success. And that is so important. All right. So, some key points from chapter 3 are that trading success isn't about market knowledge alone, it's about taking personal responsibility. Because, most traders sometimes will blame external factors for their failures. Oh, the market is going against me. Oh, the broker, they scamming. Or, oh, the news took me out. So the book explains how taking responsibility for trades is the foundation for consistency and growth. You push the buy button, you push the sell button, you made a decision at that time. So the only person you can really blame for taking that trade is the person who took it, and that is you. So the book also talks about the illusion of control. So, and the key points are that I want you to take away from this chapter is that the markets are unpredictable. So no one can control or predict the market with certainty. We as traders, we often deceive ourselves into thinking that we are in control. Oh, the market is going to do this because I know it will, because I said so. Yeah, okay. False expectations also lead to frustration. Some traders might expect the market to behave a certain way based on their analysis. When it doesn't, they react emotionally instead of rationally. Hey, we all been there. We may be so upset, cry, scream, yell, cuss, fuss. But if we want to become successful traders, we have to adapt and not control. So we need to be prepared to accept the randomness of the market and also keep that probability mindset that we talked about in chapter 1 and 2. Keep that at the forefront and know that everything is a probability. It's a chance that it might do this, but it could also do this. You just don't know. Another key point from this chapter is the victim mentality in trading. And what this part talks about is blaming external factors. Losing traders often blame brokers, like I said before. Oh, the broker's a scammer, the algorithm, or bad news. Oh, the news came out and hit my stop loss. But a successful trader is going to already know the news is coming out at 8:30. And one thing I learned in my trading journey, little segue, is that from my personal experience, you don't trade the news, you react to the news. So in my experience, I would recommend to anybody starting, especially starting out, don't try to predict what the news is going to do. Just wait for the news to happen and see how the market reacts. So don't trade the news, react to the news. The news made price do this, so now it's pushed it to an area where I needed it to go for an entry, or it just confirmed or broke a structure or something that gives you that confirmation for you to make your next move. That's how you should use the news in your trading. Trying to predict whether the news is going to make the market go up or down, it can be detrimental, and you could really wipe out your whole trading account. Also, the book talks about avoiding personal accountability, how traders avoid analyzing their own mistakes and repeat them instead. And that's another thing we need to be mindful of, is that, okay, for myself, if I lose a trade, I'm not taking another trade until I go back over my chart and figure out what happened, what went wrong, what did I do wrong, what didn't I see clearly, what signals did I miss, why. I have to evaluate what happened. So when I take the next move, I'm not going to make the same mistake I just made. I'm just not going to jump back in the trade just because it hit my stop loss. Oh, I had my stop loss too tight. Let me move it and get back in. No, absolutely not. I'm going to go back and review, and I'll catch you on the next round. The Forex market is like a 24-hour bus stop. You missed the first bus, guess what? Probably in another 30 minutes, every 20 minutes, another bus is coming. Every 5 minutes, another bus is coming. It's so much activity going on, so many buses coming, that it's okay to take time to analyze your mistakes before you go back and get on that next bus. So the book also explains how the market exposes weaknesses. The market doesn't cause emotions, it reveals already what's inside the trader. So what this part is talking about is that, the market didn't piss you off or make you upset. You was probably already upset. You probably was already nervous. You probably already had anxiety. You already feel some type of way. You're trying to make some money. You're trying to learn a new skill set, and you're nervous. And every time you hit that buy or sell button, you putting your money at, nobody likes to lose money. So you putting your money at risk. And if you're not in that right mindset, you can make mistakes because you're not at the level where you have that mental clarity that you need to trade, to where if the trade does go against you, you have that mental fortitude to say, okay, I lost this trade. Like I said before, part two, go back, reevaluate that trade before you decide to enter another trade. And don't get upset because you lost, because it's always a chance to lose. But as long as you're taking those calculated risks, one loss isn't going to hurt you. It's not the end of the world. As long as you leverage properly and took that calculated risk, leverage properly, follow all your rules. Remember, I believe it was either chapter 1 or chapter 2, I spoke about how we should all have rules that we implement while we're trading. So as long as you follow your rules, you use proper risk management, then there's no need to get upset. There's no need to be angry or feel some type of way, because you just have to just keep studying and keep it moving. The power of taking responsibility. So, trading, the book explains, is a game of probabilities. So, accepting, just as I was speaking about, accepting responsibility means that understand that losing is part of the process, it's part of the game. You may lose 3 trades, but you may win 7. Those 3 trades that you lost was a 2-1. The 7 trades that you won were 2-1. So you're still up. Out of those 10 trades, you won 70. That means you're up 70%. You won 70% of your trades. That's winning. So just know that losing is part of the process, especially when you first start out. You're gonna lose. You're probably gonna blow accounts. You're gonna lose money. You have to learn. But as long as you're learning from those mistakes, it's okay. Remember that you control your reactions, not the market. The market moves independently of you. The only thing in your control is your response. There's no need to throw a temper tantrum, break stuff, cuss your family out, isolate yourself. Just go back to the drawing board. There's no need to overreact. It's just a thing and it happens. So remember that responsibility brings confidence. So once we own our decisions that we make, that will lead to clarity and better execution. So you have to own that, oh, okay, I impulsively jumped in this trade without fully waiting for the market to come to where I needed to be. Rather, I chased a big impulse and now I'm caught up in the correction. And now I have to hope and pray to God that it doesn't hit my stop loss before it goes back into the continuation phase. So those things are important. You have to own your decisions, and eventually you will have that confidence to make better decisions and to execute at the right time. I'm saying all this from experience too. This is not just me reading a book. I've been doing this trading. I started my first trading course in 2019. I didn't really take it serious until about 2020, 2021 is when I really took it seriously. And I can honestly say it's been the best decision I ever made. So we want traders to shift from a victim mindset to a proactive mindset. So the book talks about how to do this, how to go from that thinking everything is against you and the market is the problem, the broker is the problem, everything else is the problem except for you. You're not the problem. We want to stop blaming and start analyzing. So, in order to do so, you want to keep a journal to review your trades objectively. After you're out, you record all your trades for the week. And then on Saturday, you go back and you look at every trade. You do run a replay on TradingView. If you don't use the replay option on TradingView, I highly recommend it. Trust me, it can only help you. Use it. I highly recommend. So keep a journal, go back and review your trades. And that way you can see, oh, okay, it wasn't what I thought it was. I actually didn't see that the market has shifted from an uptrend to a downtrend. Or I didn't realize that this structure was broken. Or this trend line was here. I didn't even see this trend line. I forgot about this trend line. Those things you go back and look and see so you don't make those mistakes again. Okay. And then you also want to detach emotionally from outcomes. So one single trade does not define your success or your failure. So just because you lose a trade, that doesn't mean you're a terrible trader. It just means you took a bad trade. And don't beat yourself up or beat yourself down about it. Just like we talked about, you'll analyze it at the end of the week, or at some point during the day, you go back and analyze it before you start trading again, and you won't make those same mistakes. So don't get yourself upset or feel like you want to quit just because you lose one or two trades. You want to focus on execution over results. So you want to judge yourself based on how well you follow your trading plan. Did I wait for this? Did I wait for A? Did I wait for B? Did I wait for C? Was all my rules lined up? Did I follow my plan to the T? Was I disciplined enough to wait? Did I wait until I seen these indicators to show me that it's time to enter the market? So you want to judge yourself based on how well you followed your rules, not on how much money you made. You followed your rules, you stuck to the plan. Even if you only made $50, you stuck to your rules, you followed your plan. The freedom of full responsibility. So, some key points the book put out in this section is that no one controls your trading but you. The moment you accept full responsibility, you gain control over your future success. No more excuses. Every mistake is a learning opportunity. It's not a failure. Don't blame no one. Just use it as a building block to your learning. Okay, I made a mistake. I'm going to try my best not to do it again. I know the next time I'm going to do this. I'm going to make sure I'm checking Forex Factory to make sure to see when the news is for today before I even look at a chart. What's the news for today? What's going on in the economy? What those little simple things. So just use those, every mistake you make is an opportunity for growth. Consistent success comes from within. You have to master those emotions and discipline. Mastering emotions and discipline is what separates winners from losers. You have to be disciplined. You have to be. The market will eat you alive if you are not disciplined. I cannot stress that enough. You have to be disciplined. You have to learn to wait. So, some key takeaways from chapter 3, some key points I want to share with you all is that trading success starts with taking 100% responsibility. The market is neutral. Your interpretation of it determines your results. The market doesn't know who you are. They don't know you are putting a buy or a sell in. The market is going to do what it needs to do. How you see what's going on, what's happening, is what will determine your results. Accepting losses and mistakes is the only way to grow and improve. You're going to lose trades. It's not the end of the world. You're not a terrible trader. Show up every day, 100%, and you will be successful. Focus on probability, execution, and learning rather than control and blame. That statement right there just speaks for itself. So, as we wrap up chapter 3, review, I want you all, whoever comes across this video, to analyze your mindset. Do you ever blame external factors for your losses? Think about that. When you lose a trade, do you ever blame external factors, the wind, the moon, your baby daddy, your husband, your wife? the kids. Think about that. Keep a trading journal. Track your mistakes and take responsibility for them. What went wrong here? What did I do? What can I prevent or avoid doing the next time? And then lastly, commit to a responsible trading approach. Focus on process over outcome and develop emotional resilience. Focus on the process over the outcome and build that emotional resilience. So go ahead and take those steps, and I guarantee you it will contribute to your trading success. So that is the end of our review of Chapter 3, Trading in the Zone by Mark Douglas. And I thank you all, whoever comes across this video. Thank you so much for watching. Just go ahead and don't forget to like the video so that way more people will see it, and it tells YouTube that I'm giving you guys valuable information. And make sure you also subscribe and share. Tell a friend and tell a friend. Everyone is welcome in the traveling trading zone, whether you're a new trader, if you're an expert. Hey, we could use an expert to come in and give us some advice. So no matter your level of trading, everyone is welcome here. I wanted to kick off this live series just to explore trading psychology more before we get into, once we complete this series of trading psychology, we will get more into other trading subjects. But for right now, our focus is on psychology because it's the most important part. It's the most important um, part of your trading in order to be successful in this Forex trading game. So I don't want to keep rambling on. So thank you all so much. Whoever comes across this video, don't forget to like, share, and subscribe. And thank you for joining. See you next week.